$2.5 million in a single payout, with a total of close to $4.5 million in prop firm payouts across his career. May be considered the best ICT trader in the world, Mr. JadeCap effect.
I wasn't even trying to achieve the record payout. When I hit $1 million, I was like, this is really what I wanted. A couple weeks later, now I'm sitting at $2 million. There's two ways that you go about it. You trade extremely conservatively for a very long time, or you don't care about losing the evaluation sign-up fees and just go for it. I think a lot of traders need to understand that proper trading and green P&L comes from, and that's, I think, the defining factor with a lot of successful traders. A lot of traders, they cannot identify what is a high probability versus a low probability condition. They just assume that if I show up to the charts today, it's going to be a high probability condition, right? I think a lot of traders that are scalping, they just can't make a really good decision in that short amount of time. They don't have the ability to actually critically process what's going on in the markets. They're just acting off of emotion a lot of the time.
Is there anything that stands out to you on two sides? One, a very, very common mistake traders are making. But two, is there a common trait or something that really, if traders could understand or overcome, they could make progress?
So the one thing that really stands out to me, in my opinion, and the ones that probably aren't going to make it in this industry are the ones that just...
The number one podcast in the trading space, the fastest growing, and that's thanks to every single one of you. Hey everyone, before we get into this incredible episode, I just want to say a massive thank you because we are still the number one trading podcast in the world and the fastest growing thanks to all of you and, of course, our incredible guests. Without you, we would not have reached these heights when it comes to the level of production and the level of guests that we're getting. When I started, it was simply for the love of podcasting, and I was interviewing my friends who traded. Suddenly, I'm interviewing the biggest influencers in our industry, and next minute I know I'm sat opposite Jack Schwager, the author of Market Wizards, who inspired an entire generation of traders, including myself, when it was a massive inspiration to the podcast. And when I interviewed him, we decided to make the big step to go verified with all of the results of our guests. And then we did a huge US tour in January. We went around the whole of the US, interviewing the best, brightest, and most committed traders in the world, with $1 billion plus in verified profits and hundreds of years of experience combined. And we're bringing those episodes to you every single week. All I ask is that you hit subscribe, hit like, and share them with your fellow traders so that we can continue to bring you week on week the best traders. Talking of which, today he's no stranger to the podcast, and he is a phenomenal trader and someone I really regard as a future market wizard. JadeCap Effects, aka Kyle, has done incredible feats, millions of dollars in payouts using an actual profitable edge, but trading evaluation firms and prop firms. He has just hit the record with Apex, which is absolutely incredible. And today I'm excited to have that episode for you. Now, with Market Journal, who we are partnered with, a free newsletter every single week, completely free, where they cover stocks, futures, forex, crypto, so that you don't have to panic, you don't have to worry, you can be calm and collected when trading. Now, as part of this partnership, every single week, we're going to create a PDF and provide it to them to include in their newsletter of the key lessons from every single guest. Sign up once, and every single week, you get that in your inbox. Links in the description. Now let's go hear from Kyle and how to be an elite prop firm trader. Welcome everyone back to the Words of Rizdom podcast, still the number one trading podcast in the world and the fastest growing thanks to all of you and our incredible guests. Talking of which, today we have a very, very special emergency episode, if you will. A record has been broken. The all-time payout, one-time payout record with Apex, $2.5 million in a single payout, with a total of close to $4.5 million in prop firm payouts across his career. I think you already know who it is. Maybe considered the best ICT trader in the world at this point.
Maybe.
Mr. JadeCap effect. Well, Mr. JadeCap. I was about to say FX. FX is gone. You moved to futures, man. How are you, man?
I'm good. How are you?
I'm absolutely
Thanks for having
amazing.
me on.
Well, thank you for being here, man. And I'm sure there's loads of people hitting up your line, and I always appreciate that we get to sit down. You're probably actually one of the most reoccurring guests that we've had on the show, which is incredible. But today, huge congratulations to you, Kyle. When we first met a few years ago, this doesn't shock me. It's not really a big shock to me. I'm probably sure it's not a shock to you in a sense as well. But you've always shown professionalism and a professional mindset towards trading, and really, really peak performance when it comes to your trading. But if you had to put it down to like one thing that allowed you to achieve this particular payout, this particular milestone, what would that be?
To me, it's really about emotional balance. I think to be able to get to the uncapped payout window, right? It takes a long time. You have to trade for, I believe, 48 days. Me for 56 because one of the payout windows got denied. That was totally my fault. But to trade for that period of time and go on the streak that I did, it wasn't easy. And there were days where I felt myself going on emotional tilt, but I was able to just kind of rebalance myself, get right back in the process and then come back the next day and follow the rules again. So there were some days where I was breaking rules. I had pretty large P&L swings towards the end. And I think that was just really from more so burning out and just not having that energy to continue trading the accounts at the same level as when I first started. But I think, having that emotional balance and staying cool, calm, collected throughout the whole process was extremely important because I think, as most traders know, and as the audience probably knows, like trading, when you're in front of the screen and you're trading, sometimes it feels like a lifetime, like an 8-hour day. If you're sitting in front of the screens for 8 hours, sometimes it feels like you've lost years of your life, right? So it's very important to try and keep that emotional balance throughout that period, just so you can, if you're going on tilt, to make sure you cut yourself off quickly or only focus on taking A+ setups.
I'm actually glad that you said that because I think a lot of people, when they see these things, they see someone like Kane, see someone like yourself hitting these huge numbers. It's easy, I think, for the audience to assume that, you just hit green after green after green day, right? But the reality is, and you both did a great job, but I definitely got to see yours firsthand, where you did a great job of just being so transparent and sort of sharing that, this was a down day, or this was a rough day, this was a day where I finished green, but I wasn't happy with my actual performance. And, what is the realistic expectation of a trader who's been doing this for over 10 years, has been successful for many, many years, performing one of the best in this side of the industry for sure? What does that reality look like in terms of those tilt moments, having to catch yourself, having to observe your performance and still, even if you finished like up, I remember there was a day, I think, if I'm not mistaken, where you finished over 6 figures up, but you said, I wasn't happy with this performance.
Yeah, because I was like down 6 figures earlier in the day. The realization is that the game never really gets easier. You just get more comfortable with the swings. You get more comfortable with the emotional volatility, and you get more comfortable with the risk that you're putting on. And that took a long time because, and I've mentioned this before, when I first started trading and when most traders first start trading, you're putting on $50, $100, $250 in risk. And it's causing like heart palpitations almost. And it's very stressful. And as you level up, and as you scale more and more in your trading size, those feelings still come back. So it's not like I've reached the point where I'm just a robot, essentially. And it's, it takes a toll on you at times. So you have to be able to understand that there are cycles in trading. And I'm, just being completely transparent. Last year was not one of my greatest years. I did like, 100K, but the year before that I had done like 400,000. So it's not even like anywhere close to what it was last year. And it was really, I just was following the same process. It's just, you're going to go on streaks. Like trading is very streaky. And you have to make sure when you're on a cold streak that you have to protect the downside as much as possible, because those are the periods where you're going to end up blowing up. You're going to, go into a really deep emotional drawdown, and it's going to feel like you can't figure this out. And traders that are senior traders, they still go through those periods. When they go into a losing streak, it's like, I've lost my edge. After a couple losses, it feels like you've lost your edge. But I think if you could just reset, and what I did on this run was every single morning, I just kind of took a moment and ran through my game plan of what I was trying to achieve at the end. And I wasn't even trying to achieve the record payout. When I hit $1 million, I was like, this is really what I wanted. A couple weeks later, now I'm sitting at 2 million. It was like, I just came back to the drawing board every single day, ran through my processes, said, this is what I want to do on the specific day. This is my bias. This is how I'm going to manage my risk. Sometimes it went perfectly, like A+. Other days, not so great. And I think, the reality is that there's ups and downs in trading, and it's never going to be perfect. Even the run that I had, when you look at the end of the day P&L, it might be perfect to some people, but for somebody that's always trying to prove, there's never a moment where you're like, I did that perfectly.
No, I love that. And it's interesting to say that, actually. So, 2 years ago, 400K a year. Last year, 100K a year. It's so interesting then that coming into this year, you end up starting, well, basically start of Q2, 2.5 million in one go.
Yeah.
Right. And so we've got the rest of the year to go, which is incredible. And we'll come into sort of like what the future looks like for the rest of the year, for example. But the reason I mention that, and I'm thankful that you brought it up, is that, you know, a lot of people assume 400K 1 year has to be more the next year, right? And if it's not, that's going to be a psychological problem for them. What was your thought process? What was your mindset?
Well, to me, it was a psychological problem. So like when I was going through Q1, Q2, I wasn't doing that great. And now all of a sudden, like the emotions start snowballing and it feels like you've lost your edge entirely.
Last year?
Yeah.
Okay,
yeah. So I was, you know, trying to start my, you know, another business up. I was pretty busy, occupied. I just moved down. I was still trying to acclimate to the area. And I don't think I was like in the right headspace. And that, you know, it impacted me a lot. Not only that, because I was, the industry changed. And then not only that, I was trying to replicate the performance I had the year before. And I was too focused on the performance. So, you know, when I'm posting P&L now, it's just, I've tried to disconnect so much from it and just focus on good trading. And just the P&L is just the result of good trading.
So when you say performance, it was more so you were focused on the result of last year.
Yeah.
Or the previous year, sorry, so 2023.
Yeah, so my processes broke down. My routines broke down. I wasn't following the rules that I had set out in place. And it was just overall, it was just a very sloppy year for me.
So how did you then make the necessary reflections and changes coming into this year?
Honestly, just taking a break. I took a break for like a month. And I usually do anyway. In December, I just took a very nice long break. Spent the holidays, you know, traveled a bit, saw family, and just kind of grounded myself a little bit again. I just, you know, thought about the long-term process of trading, and it's all probabilities. It's the law of large numbers. If I just show up and continue to implement my process, my edge every single day, I know that the money's going to come. And my stats and my data say that. Like my win rate at times is not great. Some months it's amazing. Some months I'm doing like 75, 80% win rate. Other months 30, 35%, but I'm still making money. So it's just having the comfortability, taking losses, taking numerous losses. Maybe you're going on a cold streak. Maybe you're going on a week-long losing streak. You know, it's not stopping you from coming back the next week and making it all back.
So interesting. So then the start of this period then, so you come off that break in December. And as part of that break, you were reflecting on the previous year, reflecting on, okay, this is what I need to do. This year there's a lot of different factors. Part of that factor was obviously you're trying to compare to the previous year and trying to replicate that. But let me reflect. We reflect on the fact that it's all probabilities and process driven and focus there, and then the rest sorts itself out. But plus, obviously, it's a reality that, you know, like this year you might finish, I don't know, 3.5 million, let's say. But then next year might be 2 million.
Yeah.
You know, it's a thing that is
might be under a million.
Let's hope so. I would never doubt it. But yeah, so the start of this process then, coming into this year, when did the Apex sort of journey begin?
So the Apex journey honestly began last year, and I was just trying to get used to the trailing drawdown because it's very, very difficult. Most people can't get past that trailing drawdown limit. And it was just a combination of right place, right time. Like the markets are extremely volatile right now. It's providing a lot of setups. Well, at least the last couple months. Now it feels a little bit choppy to me because we've had so much volatility in Q1, Q2. It's only, you know, it only makes sense to me that the markets might slow down and go sideways a bit and kind of chop everybody up. So it's very important to be able to protect what you've already made so far on the year. But yeah, it's kind of right place, right time. When I passed this current round of Apex accounts, I just found like a really great setup. I didn't even have to put a whole lot of risk behind it, but I got the trailing drawdown to stop on the first day. And everybody was always asking me about, you know, aren't you worried about the consistency rules? To me, I don't really care about the consistency rules because I'm not trying to force a payout date. If I breach the consistency rule, I just keep trading until I'm eligible for a payout. So if you make 5K on the first day, just keep trading it. You can't take a withdrawal until those accounts hit 20K, essentially, because it's like a 30% consistency rule. But at that point, when you get to that first payout, now all of a sudden you have how much in your accounts? It's like $400,000 in the Apex accounts if you have 20 accounts. So I was never concerned about, I need to make a payout on this specific date. I didn't care about the consistency rules. I just made sure I was managing my risk appropriately, coming to every single trading day with the same plan in place. I wasn't trading any more than like a couple micros. Some trades I was going a lot heavier in, of course, but that was when I had a really strong feeling of which direction the market was going to go. So there was a lot of dynamic risk involved. Some days I was only trading 3 micros on NASDAQ, which is not a whole lot of risk. It's like $250 to $500, but across 20 accounts, it adds up.
Don't know where the market's going next? Stop worrying about your trading. Just get informed on exactly what's happening in the markets and what to expect. From Forex to futures to stocks to crypto, be on top of it all. That's why tens of thousands of traders are subscribed to Market Journal, a free newsletter that allows traders to keep up to date with the markets every single week. Remember, an informed trader is a profitable trader. It doesn't matter if Trump tweets, AI stocks are pumping, or if Bitcoin drops out of the sky. Market Journal has you covered. Join for free today using the link in the description below. Let's take a break for a minute there, guys, because I want to tell you about our sponsor, TradeZeller. TradeZeller is the #1 trading tool for all traders. It doesn't matter whether you're a crypto trader, a futures trader, or a Forex trader, whatever trader you are, all you do is connect your trading platform directly with TradeZeller. It automates and makes your trading journaling so easy. If you want to be a profitable trader, you need Trading Edge, and that is exactly what TradeZeller does. It allows you to identify edge, maintain your edge, and optimize your edge by automating your trade journaling, in-depth analytics, back testing, bar replay, and so much more. Now, WOR gets you 20% off your yearly subscription with TradeZeller, so use WOR for 20% off your yearly subscription, or Riz10 for 10% off your monthly subscription. The link is in the description below. Now let's get back to this episode. Would you say that that is the case when it comes to overcoming that trailing drawdown? It's just essentially you need to really hit a really good trade to begin with?
Yeah, it's either that, there's 2 ways that you go about it. You trade extremely conservatively for a very long time until you get the trailing drawdown to stop, and then you can start sizing up, or you don't care about losing the evaluation sign-up fees, registration fees, and just, go for it. That's essentially what happened to me. It was a little bit of both. I wasn't like risking a whole lot, but the market just moved 1,000 ticks in the Asian session nonetheless. So, it's the right place, right time. You have to have a little bit of luck in trading.
Yeah, I think it's an interesting one. It's kind of like there is luck in that sense of things. Like you don't know when the market's going to create this volatility, but equally, it's like you're there to take action, you execute correctly, and that's not luck on that side of things.
Yeah,
right?
you just show up daily with the same mindset.
It's what do they say? I think it's a saying. I might butcher this because it might not exist as well. But it's like when luck meets preparation or something like that, right? And that's a prime example, I think. But talk to us about, you mentioned the dynamic risk sizing there, and sometimes when you felt a bit more confident in the moves, rightly so, like we've had some really great volatility during that period. What would you imagine, let's say, if you were still in that journey right now, maybe the next month still to go till like the ultimate payout, and then you're in these markets right now, do you think there would be some struggle there?
I think not so much, because I had such a massive buffer, and a lot of my trades, even when I got to like $20,000 in profit on each account, which it was, it ended way past that, I was still only risking like $1,000 to $2,000 per account. So it was like 20K to 40K across all of the accounts. It's still a lot of money, but if I take multiple losses in a day, I'm still never in that situation where my equity curve dips too much. I know there's probably a lot of traders out there that we'll probably get to that level and be like, I'm going to risk 10K per account, right?
That's
so
what
it
I
ends
say,
up being like $200,000 or $400,000. And I know Kane did that towards the end of his run as well. But for me, I was just trying to protect what I had already made and just continued showing up and found trades that I was able to scale into. So it may have started with $1,000 worth of risk on that one specific trade, but then if I was able to adjust my stop loss, add another $1,000 of risk, now all of a sudden, if I get stopped out, I'm only losing $1,000 per account. But I now have 1, 2, or 3 positions on. So when it pays me out, I'm getting paid, an
incredible amount.
A large multiple of that initial risk.
It's a beautiful thing, actually, because we shot that yesterday. It won't be out yet, but new channel coming in terms of strategy breakdowns. We shot one with Kyle in terms of the strategy used on these Apex accounts and just generally that Kyle uses. And there was one beautiful thing when it comes to the risk management that you just mentioned, which was in regards to, you won't dynamic size in terms of just risk more on the initial position. As you just said, you'll risk, let's say it's a 1 to 3, just for the risk to reward side of things. So you'll risk the 1. Once that's able to be reduced and you have a scaling opportunity, you're then able to risk another 1. But now that 3 becomes 6.
Yeah.
Or that 6 becomes 9. So in that example you just gave, let's say you had 3 positions, it's still only one risk, which probably has then been at break even. Then you got 9 reward. Right?
Exactly.
It's phenomenal,
Exactly.
phenomenal, honestly. And it was really insightful to see because the beautiful thing that I saw when we went through that strategy breakdown, which again you guys will see in the next few weeks, is the simplicity of the strategy. Like when a lot of people refer to ICT as complex and complexities, and I think a part of that is yes the teaching style, but equally a part of that is people. They're choosing to then sort of take everything and trying to mold all these things together.
And they keep adding and keep studying.
But the best ICT traders I've seen are the ones who have simplified, right? They've taken the things that they've wanted to and have resonated with them and have simplified. And one question that someone did ask, I put a little tweet out the other day to ask, like, I'm sitting down with Kyle, any questions, right? Because we'll get on to how you documented the journey in a moment. But a lot of people have been watching the journey. And one question was, like, are you using other concepts outside of ICT?
So I've used what I've learned in the past, but the biggest hurdle that I had to get across with trading was just being okay with what I've already learned. And I'm still learning. And I actually mentioned it the other day on Twitter. I'm learning more about myself and the world around me. And that gives me a bigger edge than trying to learn all these new trading concepts. Because with trading concepts, there's never going to be one that is like the holy grail that really adds a lot of improvement in your systems.
Yeah.
Because the probability of the trade, regardless if you know Gann or Elliott Wave or RSI, MACD, whatever it is, that next trade that you put on is the same probability as if you didn't know those things, right? So if I go out and learn Elliott Wave, which I don't, tomorrow if I take a long position in NQ, it doesn't change the probability of that trade, right? So the biggest edge that I got as I grew as a trader was just finding things that resonated with me, sticking with them, because a lot of traders get bored of a specific system and they want to find something new because that's exciting and it gets your dopamine going because there's curiosity around it. But yeah, the biggest thing for me was just being okay with what I've learned already. I didn't need to learn more about the market. I just needed to refine my systems. And when it came to refining my systems, the biggest edge, again, was trade management and risk management. So I had a really good system. But when I started focusing more on trade management, risk management, and emotional control, those 3 things carried my trading so much farther than all the years prior trying to add new systems and new concepts and new strategies.
I think that's a very powerful sentiment in terms of, like, I think a lot of people out there would improve their trading by focusing on that side of things, like the risk management and their trade management and their emotional control versus finding a new system or finding something new that they can improve on and add in. But just to go back to what you said there, what you're doing right now in terms of learning is learning more about yourself. Like, what does that look like? If there's any insights you can share there.
Really, it's just I'm like an addict for trading material. So I'll read all the new books that come out, and it's really just getting different perspectives, essentially. When you're learning and you're growing and improving in life in general, it's just about getting different perspectives that help you think as an independent thinker. And I think that's something that a lot of people possibly lack, and especially nowadays because the short form content is so rampant that people, their attention spans are so short that they can't really learn anything properly over a long period of time. And I think reading is probably the one thing where if you can sit down and read a book for a couple hours, you're probably way far ahead of most of the population on the earth. It's because you can't if somebody's really addicted to short form content, you try and sit them down and read a book for an hour, they can't sit there for an hour without picking up their phone. Right. So it's very difficult. And I think nowadays, and that's probably the biggest struggle nowadays, is that there's so much information, so much short form information that people can't retain it all. It's very hard to retain information. And I think at least spending an hour a day reading definitely improves my focus. It improves my thought processes and the ability to, think about how I'm going to grow and improve as a person.
I think it incentivizes deep thinking as well. Because one thing I was just reflecting on when you said that is these short form content, sort of addicts, and just generally, people who are really kind of on their phones a lot, including myself, is it can create a very chaotic mind, like a very racing mind, which is when if you bring that to trading, all these 1 minute candles, 5 minute candles, or these spikes, especially with the volatility we're seeing, imagine what your mind's going to be like when that's what your mind is pretty much all the time outside of the charts. Probably when you're on the charts, you probably got your phone out as well, compared to if you've meditation, things that allow for deep thinking, things that slow down that pace, don't get me wrong, as a scalper, thinking fast is important, but there's a difference between chaos and thinking fast. You know, like something intentional versus.
That's why I think a lot of traders that are scalping, they just can't make a really good decision in that short amount of time. Because they don't have the ability to actually critically process what's going on in the markets. They're just acting off of emotion a lot of the time. And yeah, I think meditation for me was a big pillar in my growth as well, because I always looked at meditation and I was like, that doesn't work. Until I actually tried it and realized like my thoughts were racing so badly that I couldn't sit still for even a couple minutes. When you close your eyes, again, it feels like an eternity that you're trying to focus on meditating. But when you open your eyes and look at the clock, you're like, man, I still have 15 minutes to go for this session. And to me, it's very important. You have to be able to, and that's, again, part of like the morning routine is just being able to sit down, run through my processes, at least meditate for 10 to 15 minutes and visualize how I'm going to execute in the market. So when I visualize everything that I'm going to do, then nothing becomes a mystery to me. You know, nothing really blindsides me. Right.
The beauty with meditation, the interesting thing is it's probably one of the few things where you literally get direct results. Does that make sense? Even the first time you do it, yes, you might struggle, like you said, like you might just do 2 minutes. Even that 2 minutes, you'll see results.
Yeah, you get mental clarity.
You'll be more calm. You'll feel that calmness. It might not last long, right? Especially the first time you do it, but you will feel it instantly. And the more you practice it, and it's just like anything else, the more you build that muscle, the more you build up those reps, you know, suddenly you'll be doing 15 minutes or maybe 30 minutes, but then you'll really feel a difference. You know, I love that. One thing you mentioned about process, like what does that look like? What is it that you're actually looking at when it comes to, you know, reviewing your process every morning? Like what are those things? Is it a checklist? Is it a particular routine? Is it like particular things in the market?
So it really is just a checklist. A lot of the times, and I started doing this a couple years ago, was I'd make sure I do a nighttime prep routine. Like I'd sit down, review all the daily charts, and I run through a watch list of probably 10 to 15 markets. And you know, I produced a pretty good YouTube video on it, on why I follow so many markets. And we talked about it yesterday as well with the intermarket analysis thing. When you're following so many different assets, you have much more opportunity, right? But there's more room for error if you're unskilled. But when you are following more markets, now you can filter out markets that are slow. Okay, and I think the biggest run for me was, and when I do the best is when I go into the market that looks ready to move. I'm not trying to trade slow markets. So that's part of my nightly routine. So I prep that, and I'll flag the names and assets that I'm trying to trade the next day. And it's only going to be 1 to 2. I'm not trying to flag 5 different markets and try and follow 5 markets the following day. So I look at a big watch list, a basket of assets, and then I dial it in to 1 to 2 markets that I want to trade the next day. And then in the morning, it's really just running through my process, my strategy. If I'm trying to go long, again, I'm trying to buy it below the open. So I want to see it trade lower first, maybe induce sellers, maybe take out liquidity, market structure shift higher, and maybe displacement, fair value gap, enter a long position below the midnight open, and just manage my risk appropriately, expecting that the daily candle's going to close higher. And then once I'm in the trade, though, I can't do anything else. Like I'm no longer in control of the trade. The only thing I can control is the stop loss and my exit. So my exit, it's either going to go to my target or I'm going to discretionarily close. And I usually don't discretionarily close in a loss. Usually when I have the risk on, I'm assuming that I'm going to take a loss. So every trade that I put on, and Gene mentioned it on Twitter, I don't know if a lot of people do this, but before I even put the trade on, I just assume that money's already left my account in the form of an expense. So if you're running a proper business, you have expenses, you may buy inventory. You don't know when you're going to profit off of the inventory. So if I'm running a retail store and I buy 10 laptops, I don't know when I'm going to be able to sell the 10 laptops. And that's the same mindset you have to have in the markets.
But the money goes out anyway.
Yeah, the money goes out anyway. It might take 15 minutes to go towards your target. It might take 3 hours or 4 hours. There's some trades where I'm just sitting there watching paint dry, essentially. But in the meantime, I'm trying to be productive in other ways. I might be watching your podcast. I might be looking into other trading material. Maybe I'm looking at news. Or maybe I'm just kind of watching stuff on YouTube to pass the time. But in the meantime, I really am not doing anything. And I think a lot of traders need to understand that proper trading and P&L, green P&L, comes from not making so many decisions. So if I had to break down the amount of actions I take per trade, it's probably only 2 or 3. So I enter the trade, maybe I manage the stop loss, maybe I add, and then I exit. Right? If you constantly have a trade idea, now you're in, out, moving a stop loss 10 different times.
Yeah.
Now all of a sudden you're micromanaging the trade, and it hurts your P&L.
But that process you mentioned is so important to that, to be able to stick to that and be more calm with following that. Because
when you're in it and you have risk floating around, you're very uncomfortable, and that's the meditation thing. You have to be comfortable with that uncomfortability. Like sitting still with your mind and your own thoughts is extremely uncomfortable, and that's probably the biggest challenge that a lot of traders are facing.
How much does fundamentals come into your trading? As in, like, is that something you're tracking? Is it something that you are using as part of the strategy, or is it more so technical based, and you understand that the fundamentals obviously has a play in the volatility?
Yeah, so it's a bit of a hybrid. I would say it plays like a 20 to 30% importance in my trading, because I'm trying to intraday trade inside of a global macro trend. So if I'd see something going on in the world that's affecting a market, and it's going to affect a market for the next 3 to 6 to 9 months, maybe even a year, then I'm trying to trade inside of that quarterly cycle. But I'm still, I'm trying to get flat intraday basically. So I mean, I'm taking advantage of the long-term trend, but again, I'm trying to take advantage of just the intraday volatility within that long-term trend.
Definitely.
Obviously,
You're gonna love next week's episode with Mr. John Netto. He wrote a book called Global Macro Edge.
Okay, I have to pick it up.
Yeah. It's like this big.
Yeah,
I'm not joking. It's
I might have to audiobook it then.
It's huge. Great guy though. You'll see, like, his energy is amazing. But that is exactly what he said as well. In terms of, his whole edge was focusing on when the global sort of macro edge is in play, and really sizing into those positions. He did a phenomenal return. I think he took. He had a minute. For 6 years, I think he made like 40% every year, or more, but a large amount, but with just a 15% drawdown each year.
Wow.
As a max drawdown over the period of time, which is incredible. But to go back to what we were talking about, in terms of multi-asset analysis, it's interesting what you said. Like, you'll have like a 10 to 15 basket, focus on what is looking to move and has opportunity now, and then even let's say if that's 5, you then focus on the best 2 to what your sort of opinion is on that. Do you feel like traders who are only trading 1 to 2 pairs are kind of capping themselves? And as you said, it is a bit more advanced, to be looking at that many markets. But would you say they're kind of capping their potential? Because if they're, let's say, just on EU and GU, very correlated as well, have a lot of choppiness, right? And you really only see some volatility and trends coming in when there's some sort of global macro edge taking place. Do you feel like a lot more traders, once they've built the skill set, should be sort of broadening their horizon when it comes to markets?
Yeah, I believe so. Because the thing with multi-asset analysis is it'll tell you when markets are a bit out of sync and uncorrelated. So when I'm expecting the dollar to go higher or lower, typically I'm expecting all the foreign currencies to move in a specific direction. So if the dollar is going higher, I want to see euro, pound, Aussie dollar, New Zealand dollar all moving lower. And a lot of times when those markets are not moving the way they should be moving, I typically identify those as low probability. So, when bonds are doing a specific thing, yields are doing a specific thing, but the market's not in agreement, those are conditions that I typically sit out on because it doesn't make sense to me. And when those conditions, when it doesn't make sense, that's typically when I lose the most money. So I think it's very important to eventually work your way to that level of understanding multi-asset and intramarket analysis, because it helps you avoid a lot of the drawdown periods that you might be experiencing. Because a lot of traders, they cannot identify what is a high probability versus a low probability condition. They just assume that if I show up to the charts today, it's going to be a high probability condition. Right?
We wish that would be the case. Let's take a break for a minute there, guys, because I want to tell you about our incredible sponsor, Alpha Prime, the first of its kind in the industry. Now, evaluation firms have been in the industry for the last few years and done absolutely phenomenal in terms of its impact for traders. As you can see here, through Alpha Capital and Futures, so many payouts to so many traders across the world. But now, for the first time, there is an incredible route for traders to become professionals and to trade live capital, and that's through Alpha Prime. So let me quickly tell you how it works. You could just buy a challenge on Alpha Capital or Alpha Futures. Doesn't matter which one. So Alpha Capital, you have phase 1, phase 2, phase 3 challenges. On Alpha Futures, you have standard and advanced plans. Whichever one, purchase a challenge. Show consistency, build your track record, and then you can be invited to Alpha Prime. Alpha Prime, you will get access to live capital. You will get access to risk management and resources at a professional level. You will have a salary as a trader and access to trade on live trading floors starting here in London. This is the first of its kind, where an evaluation firm is finding talented traders and then backing them with live capital and creating a route to professional trading. I am very proud to be sponsored by Alpha Prime. The links for both will be in the description below. Alpha Capital and Alpha Futures, use the code RIZ for 20% off all challenges. Link is in the description below. Now let's get back to the episode. What was the process like for you in terms of when you started to sort of dive deeper into these multi-assets, especially like the bonds and yields, for example? Because I can imagine people hearing that at home probably feel a bit overwhelmed or think like that's going to be super complex.
Yeah.
Like, what was that process like for you? Was it complex? Were there certain hurdles that you had to overcome?
I try to simplify everything. So with the yields, you just have to understand that investors are trying to seek yield. So if the yield's going higher, you're typically expecting maybe the stock market to either be flat or go lower. And usually, it's very simple. You can just kind of track both markets and go back through time. Like when yields are rising, usually we don't have a massive rally in stocks and equities. So it was a learning process, obviously. Like you have to study it for years and years because you can't just back test it and say, I've got all this experience. The problem is, you have to follow the Fed and understand what the Fed's doing with the rates and actually be there in person, seeing how these markets are reacting. And that's the part that people really can't shortcut. I think everybody thinks that they can come into the markets and trade 3 months and then figure it out, 3 to 6 months and figure it out. But the problem is that you're only possibly trading in one market cycle. So everybody in a bull market, they're in there for 3 to 6 months. They're killing it. And then the market conditions change and then now they can't adapt and they think, they just continue using that same process and mindset, and then they end up giving back everything that they've gained in that bull run.
Do you feel like if you were to be realistic or your advice, to a trader out there, like how long should a process take, Because I think a lot of traders come into the space and they still have that mindset of like a year or 2 years is long enough, right? That's plenty of time. What would your assumption be or your thoughts be in terms of, someone coming into the space? More than likely, someone at home right now has been trading 6 months, maybe a year, maybe 2 years, and they're probably frustrated that they haven't got results. Like, what would you tell them?
I think it's first of all, they have to figure out what their expectations of the markets is going to be. Because I think everybody comes into the markets and wants to be Linda Rasch. They want to be Jason Shapiro. Yeah. But you have to realize that those people have been trading markets for decades, and it takes a long time to get to that level. It doesn't just happen in 1 to 2 years. And the thing is, there's so much information that you will pick up and learn to get to that level. Like, yes, you can learn a mechanical strategy and do quite well, but you're never going to be like a legendary trader if you have all these other holes in your systems and processes and your knowledge. So I'm always trying to educate myself more and more about the markets. I don't know the most about fundamentals. I'm sure if I beefed up the knowledge of my fundamentals that my trading would improve. And that takes a long time. And you have to treat all these different skills as like different branches of a company, essentially. So when you're first getting into trading, you're focused on technicals. But what technicals, right? If you go through all these different technicals, you're not really going to know one technical indicator in 3 months. Yeah. It's just not possible. And how are you expected to learn 2 of them? So if you're only studying a fair value gap, or if you're only studying Bollinger Bands. I know Linda Rasch, I believe, uses Bollinger Bands a lot. If you only study Bollinger Bands, you have to study them for more than a year, I think, to actually be an expert with them. And I think over time, I've added a lot to my toolbox, but every single one of those concepts have taken me years and years to try and dial in and figure it out.
I think it's important for people to recognize that. And the first thing you said was so important in terms of understand your expectation, understand what you're expecting from the markets and from your journey. And as you said, I think a lot of people try to compare themselves probably to you, to Linda, to Jason, or even if they're not comparing to others, they still have the goal of being an 8-9 figure trader. And there's nothing wrong with having the goal. But as you said, understand what that expectation looks like. And I think that's the missing piece.
And the way that you do that to get to that level is by focused study, because you don't want to burn out. If you try and learn everything all at once, you're going to burn out like I did, because I went through those periods. I was trying to learn everything. I was trying to learn macro, technical, risk management, all at the same time, and I just burnt myself out. So every time I left, I would come back with more clarity and just focus on a couple of different aspects and just really focus on things that I was the weakest at. So if I was really, really bad at risk management, that was really the only thing that I would focus on for an extended period of time. So, you know, even if it's just for a month, say a month, I'm not going to break my risk management rules. If you do, then you still have to continue focusing on that, right? Mm-hmm. And it's just about focused, focused building of those skills. And I love that. I believe I was watching a podcast with Derrick Rose. I used to play for the Bulls, and he talked about how Kobe would train each season. When he came into the league, he was raw talent. So each year, he just focused on a couple different things. So the first year, I believe he focused on like jump shots during that off season. The next off season, he was focusing on footwork, and he would like dial in and only focus on those skills because that's how you master them. It's not just piling them all together and trying to perfect all of them at once.
Trying to do footwork, shooting, passing, drilling all at once.
They are doing that, but it's more of a focused effort for a couple hours a day on those specific skills.
He would from I'm not obviously big into sort of like the basketball space or sports in general, but from what I've heard and seen interviews of, is that he would turn up to practice alone 3-4 hours before a game, for example. And that's the difference.
Mm-hmm.
And it's the same with trading. Like the difference with, let's say, that example and a lot of other examples that would be similar is that there's a lot of teamwork and other people involved with that journey. Trading, I feel like the problem comes is that you're alone and there's no accountability. There's no one watching you. There's no one to say, hey, have you done this today? You have to do that.
Yeah, you have to want it enough.
Yeah. What would you say was like a pivotal moment that created change for you? Because you've been very... shared your journey, and you've always been very transparent in terms of like, I struggled for this amount of time, and these were the things that were going wrong. But what was the one thing, if it stands out to you, that really made you like a quantum leap?
So to me, it was like a bit of a tragedy. I think the biggest change for me was trying to disconnect from the money aspect of it. And the two events that happened in my life that made me put more focus on time than money was losing my parents to cancer. So when that happened, I really didn't care about money anymore. I would have given all the money that I have right now to spend more time with them. And I think when I was able to disconnect from the money, and I've had discussions with senior traders before, I think a lot of people, they might never get to the point where they disassociate with money. And that's, it's an advantage and a disadvantage at the same time, because as you size up with trading, sometimes you disrespect the money. And that's part of risk management. It's part of growing as a person and managing your money. And I don't think there's really a good way of really overcoming it. I think you just either are going to figure it out or you're not. Some people just they can never disassociate with money. So whenever they have risk on, there's just different types of people. You have to be okay with the risk. Some people are risk averse and are profitable in the markets, and some people are a little bit more aggressive. But you have to disconnect from the outcome of every trade, because if you take a loss and now all of a sudden you're angry, you're going on tilt, you're not even realizing it because you're so focused on the money that you just lost. To me, I just didn't really care about the money anymore. I just started caring more about my time, because when I picked up a new career after my father had passed away, and just recognized that I had less and less time to spend with my wife, to spend with my friends, to spend with myself. Like when I got home, I didn't even have time to have dinner. Let alone work out or do anything that's really healthy and would boost my mental health. So my mental health started deteriorating, and they were paying me great money, and I just realized like money is really not the answer to your problems. And I kind of just took a step back and said that the juice wasn't really worth the squeeze to try and go down that career path. So I kind of went all in on trading, regardless if it was going to work money wise or not, and just disassociated with the money aspect, really.
Would you say that someone who is not passionate about trading and they're only focused on money can make it as a trader?
It's very hard, I think. If you just come in with the idea that I only want to do this for money, I think you're going to burn out very quickly. You're going to lose interest very quickly, especially when you're not making any money. Because if you love money and you lose it, you're going to be very upset. So I think it's not the right type of person that's going to succeed in the markets long term. I think you really have to have a passion for the game, or you have to have a passion for improving. I know there's some traders out there though that don't really enjoy trading, but they're profitable. And that to me is an interesting dynamic, because maybe there's different personalities that are fit for trading. I just don't know. For me personally, I think you do have to have at least a little bit of a passion to trade the markets.
I think it's the only thing that's going to get you through it.
Yeah.
Because even when you are a profitable trader and you've been doing it a long time, if you still feel like that's the passion. It's like, to be fair, to your point, like Jason Shapiro, he was saying he doesn't like it. And I was like, well, you do, really.
Yeah.
Because you still get up at 4 a.m., right, to check the markets and go back to sleep. You're still monitoring the markets. You're still trading. You're still turning up. If you didn't like it, you could quit right now, and it wouldn't make a difference.
Well, he's now in a routine that he's so used to that maybe he doesn't enjoy the routine as much. Now it's become
He doesn't want to wake up at 4 a.m.
boring
anymore.
a little bit, right?
Yeah.
But I think, when it comes to noticing that I had a passion for the markets, it was just like the only thing that I was willing to sit down and read a book and get through the whole book, right? Compared with going to a job. Most jobs that I had, I would wake up and hate going to work. Like I did not enjoy going to any of the jobs that I had. So I think you really do have to have a passion for whatever it is that you're doing. I think if you wake up happy and you're able to go and grind with what you love doing, that's really where you want to be. And for me, it just ended up being that I enjoy the markets.
Yeah. What was your mindset in terms of documenting this journey, through Apex? You've been documenting your journey for a long time anyway, but in particular, it was literally like a day-to-day report almost. What was your mindset around doing that?
Well, I wanted to do it partly for transparency and partly because I didn't really show that side of my run in Forex. Like I didn't really share a whole lot about what my day-to-day looked like. And I just assumed, if I was going to do this even for 3 months and get the uncapped payout, I want to show people what's required to be in a consistent flow state for that long, right? Because 3 months is not, again, it's not a whole long period of time.
When you're in it.
Yeah, when you're in it, it feels like a long time. But I just wanted to kind of document the journey and just show people like it's not always like sunshine and rainbows. Yeah. Like there are periods where I ended the day green, like massively green, but still unhappy with my performance because I know if I took a loss on those last couple trades that put me in the green, it would have been a terrible day. So when I'm grading my report card, and when I'm looking at the journal, some days I wasn't journaling, but I just know that my report card looks terrible that day. I just know I got an F. And when people say, "Oh, you're not happy," even though you made $100,000, yeah, you shouldn't be happy. Like even if you win, let's say if you're trying to win a championship, right, an NBA championship, and you played terribly but still won the game in that regular season game, are you going to be happy? You probably shouldn't be if you're trying to perform at peak performance. Yeah. Like if you're trying to be an elite trader, you should not be happy with a green P&L, but you broke every single one of your rules.
Yeah. It's the same like with the true professionals, regardless of the result, even if it's positive, if they know they didn't do everything correctly or as planned or as they should have, they always are. They show that frustration. They go to the drawing board. They figure out what happened. Why did that happen? We have to make sure this doesn't happen again. And it's not about saying that it shouldn't happen again in terms of like perfection, because that's a dangerous thing. But you're striving for it. It's not saying you're going to achieve it. You're striving to try and be perfect as a trader or a professional.
I mean, part of that is that the markets will always humble you. And, again, I study a lot of trading content. Tom Dante's talked about it a lot. He's seen a lot of traders make a lot of money that end up with nothing because they go through that really boom and bust cycle.
Yeah.
And one book that I actually was listening to the audiobook on the way here from my flight from Denver is Jesse Livermore's Reminiscences of a Stock Operator. That book was, he was trading back in like the 1920s. Nothing has changed since then, really, with the markets. It's been the same. It's just been the same struggles. Yeah, exactly. So he went through so many boom and bust cycles that he just ended up offing himself. And he went through stages where he was like a multi-billionaire multiple times and lost his fortune multiple times. And, you can never avoid those types of, stories because it really shows you that the markets at some point will possibly put you in your place. and you have to always be on top of your game. And you just can't be, you can't just say, I did great today. I made $100,000, even though I broke all my rules. At some point in the future, that's going to burn you.
I know journaling wise, we've discussed, privately and on that video yesterday as well, that it's not something you necessarily are like doing every single day and every week. You have periods where you're still doing it and periods where you're not, because at this point you have your edge, your data, the edge hasn't changed. So therefore the data is probably not going to change too much. But from what you're saying, it sounds like you still review the day's performance.
Yeah.
Which I think is probably what matters most to you at this point. How important is that for you to be able to, obviously we've talked about the process at the start of the day, but how important is that review process?
To me, it's extremely important. And what I try to focus on is not, all the mistakes I've made. I just try and focus on, how do I get back in sync with what I know what works. And to me, again, as a visual cue, I have poker chips on my desk. To me, that's like one of the most important tools that I have on my desk, because I know if I'm going to put on risk the next day, I'm only going to put in 1 to 2 chips. If I go over that, I know I'm breaking my rules all of a sudden. And it's just a quick reflection. If I break all my rules and I take 5 trades in a day, it's just so important to get off the desk, get out of the office, and reflect on that and just say, this is not the type of trader I am, and it's not the type of trader I want to be. It's not the type of trader that I envision myself to be that makes, $1 million in a year. That type of behavior is not conducive to profitability. So you have to be able to just, uproot it as fast as possible.
What was it like? Literally, when was it? 2 days ago? 2.5 million hits the bank account. What was that like for you?
Kind of a crazy moment. And I think, maybe a lot of people are not going to understand the feeling, but if it hits your bank account, it's a great feeling, but like nothing really changes too much. I was actually talking with Dan Champ about this. Nothing really changes too much. Like, yes, you have a bit more freedom. Yes, you can go buy a lot more stuff. But again, once you're at the point where you're a full-time trader and you're covering your bills and you have a roof over your head and you can afford food, what else really is there? Now you have the ability to help friends and family, take them on nice trips, help provide for them. And that's really the freedom that trading brings. And it's not so much like, I guess, a massive milestone for me, because again, I can get humbled at any point. I could lose the $2.5 million making stupid decisions. So it's really important to just, I guess, keep myself grounded and humble myself for a little bit. And yes, maybe splurge on myself because of the hard work. But again, try to bring myself back to earth and figure out where I want to go in the next 5 years. I don't know where that's going to be. And hopefully it takes me to newer heights. But really, again, try not to get too wrapped up in the outcome of what's happened. Right.
Well, you tweeted something yesterday, I think it was, and I will, off the top of my head, it was something along the lines of like you and your partner.
Yeah. So she actually brought it up.
Yeah.
Yeah. When we were just getting engaged and like saving for our wedding, we were extremely broke. So like when I got engaged, I was making $40,000 a year after I graduated from college, which was late. I was like a late bloomer in college because I went through all those problems and didn't know what I wanted to do. Fell in love with trading. I graduated at 25 years old, making like $40,000 a year. My friend who got me into the job was a good friend of mine. He did not go down the college route. Like he got in a whole bunch of trouble when he was younger, still somehow worked his way up the ladder and was making like $90,000 a year with no advanced education. And, I compared myself to that and I was extremely frustrated. And yeah, we were just, after taxes, I was bringing home, I don't know, $800, $1,200 every 2 weeks. And, after all the expenses and everything, it doesn't end up being a lot. So saving for a wedding, I've got a big family. She has a big family. We were just broke. And a lot of times we were like just getting by, paying our monthly bills, had to go to the bank, to the Coinstar, deposit change just to cover the bills.
So what's that like then, to be able to, because it's so interesting where when you're in the moment, you're working so hard, you're so focused on performance, your business, family, like all these different moving parts. It's so easy, and I'm guilty of it. I think everyone is, of forgetting what it was like 10 years ago, 5 years ago. To have that sort of moment. Would you say, however, that those moments are necessary? Like if you didn't have that moment, might not be who you are today.
Yeah, I think every moment that you go through in your journey is important because it's going to bring you to the final destination, which again, when you get to the final destination, there's another path that you're going to that you're going to take. But I think it is important to notice, like, there are parts of your journey, regardless of how much money is in your bank account, you're going to have moments of elation and you're going to have moments where you're in the trenches and, you know, it feels like nothing is going your way. And just, there's so many peaks and troughs in your journey that it's like indescribable when you start reaching your goals. But again, when you reach your goals, it's kind of like a fleeting moment. And I felt the same way about promotions at work and things like that. And I really just think it's really a growth mindset when you're in that position of, you know, how can I continuously be better? How can I improve myself? You know, maybe you want to go for another promotion at work. I just think, to me, when you're in a stagnant lifestyle, that's typically when I was the most unhappy. If I'm stuck in a specific, you know, at a specific level, I was hitting a ceiling, that's when I was the most unhappy. And it had nothing to do with the bank account, really.
What is your goal in terms of trading that? You've hit these milestones, you know, year after year. Obviously last year having a bit more of a, I wouldn't say down year, but just not as, you know, maybe peak performance as you wanted. But this year, starting off incredible. But what is your goal? Like, where is it that I know you mentioned that you're sort of figuring out that 5-year one, but do you have anything in mind of like where you're wanting to go?
I think maybe eventually, like, opening up a legitimate prop firm, helping traders more. I think it's amazing seeing some of my students. Like, one of my students just hit a 6-figure month. And it's been, I don't know, he's been with me like a couple weeks. So being able to see that in person is extremely amazing. So helping more traders. I mean, obviously my YouTube channel, I try and educate as much as I can for free. My time is important. So if people want to work with me directly, like, obviously it's a little bit of a different story, but I think goal wise is just to always be improving with my trading. I know that I'm not at the level of some of your recent guests, and that's kind of the level that I want to be at. Right. And I think it's important to always have somebody that's above you that you're looking up towards. Yeah. And trading is so amazing because you think that as soon as you think that you're the biggest fish in the sea, another one comes across and you're like, wow. So I think, goal wise is, I don't really set hard goals like that. Like, even with Apex, I wasn't trying to break the record or just happen. I'm just trying to align myself along the path of what might get me there and what might make me happy in the future.
What we haven't talked about, which is interesting, is that obviously you went from CFDs. You were known and still are known, to be fair, to be one of the largest payout holders collectively, one of the most consistent traders as well over on that space. Things happened last year within that space, made it a bit harder for US traders to trade with them. That was cool. You made a transition to futures. Mm-hmm. We have one thing we haven't discussed is, what was that transition like? Was it a difficult transition? Were there things that, you know, maybe other traders out there who are maybe thinking of making that switch? Because do you still trade both? You only trade futures now?
So I only trade futures, but I'm still trading currency futures. So I'm still trading the FX markets essentially because they move very similarly. But the transition, at least when I started trading more and more of the index markets, the volatility is different. Like, the volatility would just be within a specific time window, which is why you see a lot of day traders in the future space, is because they can get in and out of their trade ahead of lunchtime. Whereas FX is more of a slow and gradual movement. So that was probably the biggest transition. And then understanding the contract values. With FX, you can dial in the size so minutely that you can get on the exact risk that you want to put on. Whereas with futures contracts, you can get close, but not quite.
Interesting.
But other than that, the markets to me are all moving the same. They're all going up, they're going down, they're going sideways.
What are your thoughts in terms of like spread and execution in comparison?
The execution futures is definitely better, but there's still slippage. Like, when the books are thin, there's still slippage.
Interesting.
Yeah. But I think the slippage from an FX standpoint is more so the brokers than the liquidity.
Yeah.
I think there's liquidity there, but the brokers are probably
they get to set
manipulating
their own
that.
thing going
exactly.
on. Yeah. Like, what are your thoughts when it comes to prop firms as a whole? Like, we've seen such a debate, you know, of like prop firms are no good and it's not worth even trying, or you shouldn't trade it, you should just trade personal. But then you have someone like yourself who has the edge, right, and knows how to apply that edge and look at the reward.
Yeah.
Right? And there's others like you, like Kane and even Omar, Casper, like all these people who have edge, right? So what are your thoughts when you see all these comments of like, you know, no one should really be trading prop firms, or like you should be careful of prop firms, etc. Like,
I mean, you definitely have to be careful of prop firms, 100%. But it's a risk to the reward situation. Like they're giving you leverage that you possibly wouldn't be able to trade with. Like just imagine how much capital I would need to have in my account to trade 17 minis across 20 accounts, right? It's almost 300 lots that I would need to put on. But I'm doing that in a prop environment where I'm not risking my own money and possibly getting rewarded for that. Obviously, there's always the risk of not getting paid out. You know, there's some firms that still owe me money, right? They've disappeared by now. And it's just really, you have to weigh the risks. For me, the reward was always worth the risk. Even if it was $1,000, $2,000 for a challenge, I was willing to take the risk. And if it didn't pan out, I have a business that I run. I can expense that, right? So all the profits that I get at all these other firms, maybe this one firm didn't pay me out, I'll write off the expense. And when it comes to the capital standpoint, a lot of traders, and I would say most retail traders, the one thing that they struggle with is capital. They can't get enough capital to make the money that they want. Even the job that I was in, to replace my salary, which is what most people are trying to do, they're trying to replace their full-time income, I would need a lot of money without taking excessive risks.
Yeah.
So I think Peter Brandt mentioned it in your last podcast. If you want outsized returns, you have to take outsized risk.
Yeah.
Right. And I look at these prop firms as being somewhat outsized risk because you're going to fail a good amount of challenges, but the reward is also outsized compared to a personal account.
How important, though, do you feel like having edge is when it comes to even these prop firm challenges? Because I feel like a lot of people who are failing them consistently, like the ones who are really churning accounts, and a lot of the time have some sort of negative opinion. A lot of the time, from what I can tell, there's no edge. Like they're literally kind of treating it as I don't want to say get rich quick, but like, treating it as a way that they can leverage capital easily and quickly. And they assume that the problem with their trading is capital and not.
Or if they're being manipulated by the prop firm, like that they're a scam. The thing is, if I put myself in their shoes, when I was 1 to 2, 3 years in, I would be in the same situation. I'd be blowing accounts. I'd be running up credit card debt. When I started trading, there was only retail brokers. Like these online props weren't around. So I had to put my own hard-earned money into the broker, and I was losing that hard-earned money. Before I even touched a prop firm account, I was already 10 years into the game. You know, a lot of these traders that have developed a defined edge have spent a lot of time doing so. You know, and some of them have done it faster than me. I'm not comparing, but you need to be able to have an edge before you go into these types of environments. If you don't have a proven edge, you can't expect that you're going to get a payout from them.
What would you say is the worst trading advice you've ever had? Or ever heard?
You know, that's a hard question to answer because even if I get bad advice, I kind of twist it and look at the perspective of why would they say something like that? And I just try and learn something from it. You know, I'm not so critical and say that guy's an idiot. Sometimes I do, but a lot of times when I hear trading advice, you know, I just kind of look at it in a different way. And maybe that's why I like to think outside the box a bit and I'm a little bit more unique. I've always tried to be a little bit more creative when it comes to my thought processes. So when I hear certain things that I don't agree with, it's not like I think that person doesn't know what they're saying. I just know that I'm on my own journey and either I'm going to agree with them or not. You know, it's part of my belief system or it's not, right?
What would you say then on the flip side, like the best trading advice you ever had or heard?
It's definitely John Ramble Moulton, his podcast. I continuously watch all the time. Like that one podcast probably has so much value in it because he talks about, you know, basically the law of large numbers. Like he's been in trades where he doesn't even know he's in the trade. Like at the end of the day, he'll look at his account statement and be like, oh, that trade looks good. Let's keep it running. So he's so disconnected from what he's doing. He's just focused on taking good trades. And he, you know, when the trade is over, just book it and move on to the next one. That's all he's focused on. Is don't dwell so much on the losses that you've taken. Maybe you've taken a massive loss and impacted your net worth by a large amount. You have to be able to shake it off. Otherwise, you're going to be carrying that weight with you for a long time into the future. And I know that there's traders out there that have lost so much money in the markets that they're trading from a place of fear now. Like imagine losing $100,000 in the markets and now you're trying to start from ground zero again.
Yeah.
You're always going to be thinking about how much you need to make just to get back to break even. And that does not give you the environment of proper trading. You have to be able to disassociate with all of the trades that you've taken in the past, because that next trade is the most important one.
In terms of these legends that we talk about, these legend traders, that being one of them, but we've mentioned a few already. What are your thoughts? How much have they shaped your sort of mindset and your vision towards your trading, and also your trading as a whole? Because we've started to have on some real incredible trading veterans, still traders who have been trading for multiple decades but still trade to this day. And obviously, overall, the positivity is incredible. But you get the occasional comment of like, this person's a dinosaur. They don't know what they're talking about. They've been trading from 20, 30 years ago. It's useless, right? What are your thoughts?
To me, and again, it goes back to the growth mindset. I'm going to listen to everything and then come up with my own opinions and see if that fits within the narrative for me. Mm-hmm. And for me personally, Market Wizards, Chat with Traders, your podcast have been the most important pieces of my journey, because I'm learning. I want to learn from people that have more experience. Like if I want to go build a house, I'm not going to go to the guy that's 1 year in as an apprentice. Right? I'm going to go to the guy that's building a house for 10 years, and I'm going to ask him every single question I possibly can. Maybe he's going to give me terrible answers. Maybe he's not. But I'm going to listen to what he has to say and then come up with my own opinion, obviously, but still respect that he has a lot of experience. So I know, and I mentioned this on Twitter the other day, everybody's trying to give me trading advice or say specific things to me. And I'm just like, unless you have more than 14 years of experience, don't try and give me advice. All right. Because I've ironed out what I need. Mm-hmm. And I really only listen to people that have more experience. And yeah, again, with Market Wizards, Chat with Traders, and your podcast, more recently, I had Chat with Traders on in my earphones like all day long. Like that was the only thing I listened to at work. I wasn't even paying attention on calls or anything. So just listening to all those traders' perspectives has added so much edge to my trading, because it feels like they're in the room with me. Mm. So when I hear about John Randall Moulton, not focusing on the P&L, take the P&L off her screen, focus on the next trade only, specific things that I hear from these legendary traders, those things are just reinforced in my mind because I've heard them so many times that it feels like it's part of my trading journey now.
Is that what you've done as well? Like with the Apex stuff, with futures, obviously, you've been trading on TradingView for a long time. Mm-hmm. Actually, even when the CFD, you were the original hack for how to do it.
Yeah.
Is that what you've been doing though? Is like you just have the ticks or pips on rather than the monetary amount?
Yeah. Mm-hmm. And, I still look at the P&L sometimes, but it's not my focus. My focus is on the chart really itself and the ticks and the pips. I would even say the ticks and the pips is, when you're looking at the ticks and the pips, that can be detrimental as well. Like imagine if you just removed all the brackets, you didn't see anything. Now you're really just focused on the market.
What are your thoughts in terms of, as you said, you've been training traders now as well for a good amount of time, seeing results there. You've obviously been in the space a long time as well. Is there anything that stands out to you on two sides? One, a very, very common mistake that traders are making, but two, especially since training traders and seeing results from those traders, is there a common trait or something that really, if traders could understand or overcome, they could make progress?
So the one thing that really stands out to me, in my opinion, and the ones that probably aren't going to make it in this industry are the ones that just sign up with my service and expect that they're getting a course and that they can just turn into a profitable trader. Like they go through the course material and they say, I don't have any results. They don't ask any questions. They're not on the live streams. They don't share their trade ideas, and they just expect that they're going to be a profitable trader. And they have to understand that this is a lot of work. You're paying for access to me to ask me any question you want. I'm there to help you out and support you as a mentor, but you have to be able to do the work. Like nobody else is going to sit down and do the work for you. So even I provide homework assignments. It's not even asking a whole lot. It's just backtest 25 examples of this one specific trade setup. A lot of people haven't done it. There are people that do. Maybe there's people that do it in private as well. But until you're actually putting in the work, you can't really complain and say that this isn't working for you. Because again, I'm not selling a course. I don't think you can just learn from a course. Yes, I can go take a golf course, right? Like I can go take a course online about how to swing the golf club. But I have to go put the reps in at the range. I have to go to play at the golf course itself. I have to feel what it's like to stand on uneven ground and hit the ball out of sand. Like you can watch a video on it, but it's totally different when you're in it. So that's probably the most important thing is, there's a difference between theory and practice, right? So course is theory. Mentorship is practice.
No, definitely. And would you say that that's both sides then, isn't it? Like that's the mistake that they're making, but then also the one trait or habit that these traders are getting progress is that they're doing that. They're putting in that work.
So also the other mistake is that a lot of traders just don't have the emotional control over long periods of time. Some traders will come in, and I've taught some of my close friends, they'll have 3 weeks of green and then that one day that just blows it all up. And that's repetition though. I've been through those times many times. Linda Rash started off with a major blow up. So that was probably a major lesson that she learned right off the jump. And can you learn from those periods though? Like, are you actually learning something from that? And I think journaling and writing down your thoughts and everything about those specific experiences is extremely important because it imprints it in your mind.
What is your thought process when it comes to having this payout? Are you looking to start a personal account as well? Or are you focused, well, I don't know if you can trade with Apex for the time being, but are you still focused on prop firms and sort of acquiring funding that way?
So I might still be around in the prop firm space. I have to figure out like which firms I'm actually going to trade with because I know on the Forex side, a lot of the firms don't allow you to copy trade. So for me, it makes it like a management nightmare. Some of the futures firms are okay, I think. But the thing with some of the other futures firms is the capped payouts. Like, a lot of them have capped payouts now, and it takes a long time to reach that stage of uncapped. Now that I have a fair amount of capital, it just makes more sense to go into a personal account. There's tax advantages with futures, right? 60-40, short-term, long-term. So I think mostly just focusing on personal accounts, getting more into real estate. I already own one property, but trying to accumulate a couple more to try and build up some passive income, build out more of a long-term portfolio, which is one thing that I think a lot of traders probably don't have or have that mindset of, is if you're trying to like manage a whole nest egg, you shouldn't be trading with 100% of your net worth in short-term volatility, right? Like you should not be trading with, all of your liquidity in day trading.
You might start there, right?
Yeah, you might start there and build up the capital, but once you have the capital, you should branch out. You should put more money aside as like a long-term portfolio.
Yeah, it was so interesting. Our friend Trader Main, his thought process is that most people should invest. They shouldn't even trade. Like most people should actually invest, and they'll probably make more money just investing. And yet most traders don't invest at all.
Yeah.
Most traders don't invest at all, which I get. Again, like if you're at the big start of your journey, you're trying to get the capital from trading to invest.
Yeah.
That's respectable. But just don't forget that when you do actually make some money, because it's so easy, as you talked about earlier, of like if you have this record or this huge payout or this huge result, to then just try and aim and double it.
Yeah, exactly. Like to me, it would be so extremely unwise for me to just put $1 million in my retail brokerage account and try and run it up. Like that's not what I'm trying to do because I know at times I can't trust myself with the risk. So I even now, I know there's a lot of big traders that don't put that much in a retail brokerage account. They'll put like 10% of their liquid capital into a brokerage account. Okay, now trade that as if you were trading your net worth. So if you're worth $1 million, maybe put 100, 200K into a brokerage account and then trade 5 to 10K risk per trade.
Yeah, because it's more than enough. I mean, you're like,
because then if you blow the account, you're not losing the rest of the nest egg.
I think people get lost. It's good to disassociate from the numbers, but it's equally important to remember just how powerful that is. To be able to risk 5K on a trade, let's say you're doing 2 to 1, you make 10K on a trade.
Yeah,
and
again, it comes back to like disassociating with money and not giving it enough respect. There's always that balance because at times you don't want it to spiral out of control where you're risking way too much. And a couple traders I've spoken to, they just say that they leave a big stack of money on their desk just so they know what it looks like.
Funny thing you say that. I used to have £1,000 on my desk, which essentially was my 1% risk on 100K.
Exactly. Because when you see it in person, you're like, wow, that is a lot of money. But when it's just a number on the screen, you're not really giving it the respect that it deserves.
Exactly. If it was in the States, though, I'd have 10, 100 bills. It'll look small.
Yeah, and it's unfortunate because I've seen horror stories of people running up, and literally I was just with somebody at the cigar lounge last night that said that they knew somebody that ran up like $100 million in the crypto markets and then ended it, way down. They round tripped a lot of it. And It's just like when it's a number on the screen, it's not real. You know, so you don't feel the difference between 100K and 100 million, right? But they put it in front of you. They put that money in front of you, like in your pockets. Then you see it, and now it's actually real. And I think that's probably a hard part with trading as well.
Yeah, we talked about books a few times on the podcast so far. Like, is there any particular book that you would recommend that every trader should read?
Yeah, Market Wizards, 100%. And the interesting thing about Market Wizards is that he interviews so many different people that trade so many different markets. And almost every interview is very similar. So every interview, you know, they talk about processes, they talk about things that help them avoid blowing up, the risk management, the mindset. And that's really the cornerstone of trading, is knowing that there is a recipe for success. It's just maybe not your recipe, like maybe somebody's trading the options market, but that person probably has a very similar process to somebody that's trading the futures market, right? And that's, I think, the defining factor with a lot of successful traders. So yeah, that book, because it's an easy read, and I know people have short attention spans, is they can read that book because it's interview format. It's just question, answer, question, answer.
It's related to, you know, it's directly related to what they're passionate about.
Yeah, exactly.
If they're interested in trading.
Yeah, I've read a lot of trading books, but yeah, only a couple really stand out. Linda Rash's book, Trading Sardines, is quite good as well. And yeah, Reminiscence of a Stock Operator is probably a classic. You should read that book like once a year.
Definitely. You know, I feel like the reading side is really getting lost in this newer generation of traders. And I understand why. It's kind of like a thing of the past to them. But Market Wizards for sure. Like Market Wizards.
Because people they think that like reading a book that might be old is not going to give them an edge. But it's about how you're interpreting it, right? If you're interpreting the story of Jesse Livermore, of, you know, him focusing on, so an interesting thing with his story was, you know, he's trading in the time where there's pits, right? And he focused on one pit. So he would corner this one specific market before he tried to go to the other market. And then over time, he built enough skill. And then again, the boom and bust cycle thing is something that everybody can learn from.
And you see that in Market Wizards as well. That's the beauty of it. Market Wizards really shows you that pretty much all traders have that boom and bust. All traders start with quite low capital for the most part. Regardless of whether traders are fundamentals or technicals, like the rest of the principles are the same, like in terms of focus on risk management and how to avoid tilt and process and routines. And that's what matters most. And as we talked about, like, yeah, even if they traded in the pits and it was before electronic trading or whenever it was, or maybe it was early electronic trading, it doesn't matter, because it's not about how they traded. It's about the processes. What made them successful. Like Louis Borsellino never went to electronic trading because he knew his edge was in the pit. But yet he still understands the money flow. He still understands to focus on what's in play. And that was talking back then, you know? But yeah, it's completely applicable today. You see it every day within the markets. It's incredible, you know? And I think a lot of people need to sort of understand that, hey, you've got some real gems that are out there and very affordable, whether it's the book of Market Wizards, especially for free now when it comes to YouTube, and this podcast, for example. It's like, just take advantage. You know, take advantage, especially. And there's the one thing I would say, and I don't know if you ever made this mistake, but a lot of people do, is they assume just because someone has a certain opinion. I know that you mentioned actually, you know, that you kind of think about it in a different way. Has that always been the case? We'll come to that. But yeah, people hear an opinion. Let's say Chris Camillo, who just on last week, phenomenal trader, doesn't use price, doesn't use stop losses, doesn't believe in technical analysis. But that doesn't mean that he doesn't believe it can't work at all. It's just for him, it doesn't work. He doesn't like it. It doesn't resonate with him. And I can understand, yes, maybe certain terminology makes it harder to really understand that that's what he's getting at. But I don't think so. But there's some people who are like, oh, this guy's a scammer. This guy's lying. He's telling, you know he's a gambler. You know, this is terrible advice. And it's like, it's not advice. It's just him. That's him. You know, like, what
the thing is, like, when you hear somebody doing something and they say that can't be done, I bet you there's somebody out there that's doing it. You know, that's my perspective. If somebody says, you know, tight stop losses don't work, there's somebody out there that's doing it. It just doesn't resonate with me. All right. So there's definitely pit traders out there that are trading them 1 minute, 15-second chart, 2-minute chart, moon cycles. Like they're there's someone out there that's making money with it. And that's why I'm so comfortable with seeing other people do whatever you want to do in the markets, right? Like, I'm not gonna be the vigilante and say this person is doing this wrong and this person is doing this wrong. There's so much money and opportunity in the markets that I typically look at people and say, you know, whatever they have going, it probably works. Like, unless they're, you know, shady and people have said that this person is trying to scam people. But we're talking about veteran traders here that some people are saying, you know, skeptical comments about them. Like, these people have proven track records. They've been around for years. They've been in institutions and they have strong opinions. Okay. Let them have their strong opinion. That doesn't mean you need to attack them and break them down. Right.
No, so true. And one question that was asked on I always say Twitter, but I keep forgetting it's X now.
Yeah. It's always going to be Twitter.
Yeah, exactly. But one question that was asked is in terms of, it was a bit of a random one to be fair, but it's like, are you ever going to think about joining the Robbins Cup?
To me, I just don't really see the need to. Like, to me, trading is a competition with yourself. So what other purpose is there to prove to people that you can trade? Like, it doesn't do anything to my trading.
Yeah.
Like, proving to other people that I can trade does not improve my trading. I could be isolated. People wouldn't even need to know me, right? And that's how I'm going to improve, right? Just being isolated in my own thoughts, my own processes, my own decisions, right? I live and die by that. Like, my decisions is what I live and die by. Regardless of if you give me a trade signal tomorrow, I'm going to click that button knowing full well that I'm taking the risk, not you, right? Because if I take the loss, that's on me. It's not on you. Like, you gave me advice, but I'm the one that clicked the button. And I think that's so important that traders need to delineate that. There's a difference between, I guess, what other people are doing versus what you're doing. Yeah. Like, let them do what they're going to do, right? If people are scamming out there, you're probably not going to be able to stop them unless the authorities go after that guy. Yes, you can like cry as much as you want on Twitter, and it comes back to energy. Like, where are you spending the most amount of your time? Like, there's certain YouTubers out there that all they do is, you know, expose videos, but like, they're not even really profitable traders. And it's like, you're putting your negative, that energy into something that's so negative, that's such, in my opinion, a massive waste of time. Yes, you might be able to save certain people here and there, but if you're trying to improve your life and provide for the people around you in the trading space, the only way that you're going to do that is by doing it yourself, right? And not focusing on what everybody else is doing. So this is a solo game. Yeah. You can get support from people around you, be around a good circle of traders, which has helped me tremendously. But at the end of the day, I'm still in charge of everything that I'm doing, regardless of how close I have traders, you know, around me.
It all comes back to you at the end of the day. If I did give you a trade signal, you would reverse it. You'd reverse it, yeah. I'm sure you've had this question before in terms of like all the ICT material you have consumed. If someone wants to start ICT, what episodes should they go for?
To be honest, I would say just month 1 and month 2 are probably the most important. Month 2 is all about risk management. Well, this is core content 2016. Because people have asked me, you know, have you watched 2022 or 2023? But really, the biggest one that I really needed to focus on was just the risk management. To be honest, just being comfortable with the numbers, because it very clearly broke down the probabilities of if you have 5 losing trades in a row at $100, this is what your result is. If you have X amount of trades at this is what your result is, and just getting more comfortable with knowing that I'm going to take a lot of losses, and I just have to be way more comfortable with the losses, because again, if it derails my process, now all of a sudden those numbers go out the window, right? The probabilities that I'm expecting go out the window at a specific risk to reward, at a specific dollar amount risk.
In terms of if there were 5 habits that traders need to have, what would you say they were?
I think sleep is a big one. So I'll spend a little time talking about sleep. When I first started trading, I was burning myself out because I was trying to trade London session. I was trying to trade New York session. And I found that I was so burnt out that because I wasn't sleeping, I was studying late at night, I was watching London session, that my trading performance was absolutely horrible. So get your sleep under control. Make sure that the markets aren't taking too much of your time. That's one thing. Another thing is probably meditation. You know, get clear with your mind. Have some clarity when you're operating in the markets. Know the decisions that you're making. Because a lot of times you can go on autopilot, and I know what that feeling is like. You sit down in front of the charts, you take a loss, now all of a sudden you don't even think about the process. You're looking at the markets. You want to revenge trade, overtrade, all that stuff. Get some mental clarity so you know when you're going to go on autopilot so you can pull yourself out of that. The third thing is, I guess, just have a healthy lifestyle. Eat well, read, do productive things throughout the day. Don't just sit on the couch, eat junk food, and don't do anything. That's a stagnant lifestyle. You should always try and be productive because I think that keeps your energy levels up and you're working towards something. What am I on? 4? I don't know if I have any more, to be honest. Routine.
I was thinking 5 seems like a lot.
Routine, daily routine. Usually when I travel and stuff,
Yeah.
it takes me a while to get back in the routine.
Yeah.
But I like being in the routine. I think it's a nice, boring, comfortable routine. I'm not living like the crazy, glamorous trader lifestyle. I don't know. Maybe there's traders out there that do it. But I think when you get too far away from your routine, that you start making mistakes in the markets. And then 5, I would say journaling. So I don't journal as much anymore, but when you're first trying to build an edge, it's probably the most important thing that you need to do. And I probably wasted too many years not journaling properly because it's tedious. Nobody likes doing it, especially when you take losses. When you take a loss, you do not want to journal. Yeah. And that went on for a very long time. So at least dedicate I would say 6 months to a year. Do not miss a day of journaling. And then by the end of that year, you're going to have a lot of data about yourself. At least do it for a year, and then you can kind of take your foot off the gas pedal. Because right now, I don't spend a whole lot of time trying to learn trading anymore. So my process and my routine is very thoughtless. I don't have to put a whole lot of energy into it because I want to save my energy for what's important, which is the trade management, the risk management, and the emotional control.
In terms of that, especially the last part, the trade management, the emotional control, one thing that we haven't talked about, which I definitely wanted to, which I'm glad I just thought about again now, is you've shared publicly, especially during this Apex run, that really your strike rate was around the sort of 35% mark on average. How do you handle that? How do you handle the fact that you're losing more than you win?
Well, a lot of those losses are small losses. So I'm typically not taking a full stop loss. If it's moving in my favor, I'm usually adjusting the stop. So that's kind of how I deal with small losses. And I'd rather take small paper cuts than a couple big blowouts. So again, that's why I have poker chips on my desk. And during that run, I was giving myself anywhere from 1 to 3 trades a day, typically 1 to 2. So I know if I take a small loss initially, I still have a daily risk limit that I'm okay risking before I cut myself off. Just best loser wins, I guess. Tom Holgard has that book about losing in the markets, and you just have to get comfortable with it.
It's interesting you say that in terms of giving yourself a risk limit, because after speaking with like Lance and S&P Capital and other sort of more professional traders who've been in that prop environment, a professional prop environment, that is one of the major benefits. It's a team environment. They have like what they call pods.
Yeah,
right?
trading
they call
pods.
Them pods. Yeah, so that's like a group of traders together who are collectively sharing alpha, sharing ideas, and giving feedback and doing that review process as a team. But most of all, as well, having a risk manager, right? And by the sounds of what you just said, is that you're essentially, you kind of said it earlier actually, is where you have these different branches of your business, right? And that was more in regards to like how to improve certain elements. But it also sounds like you have different branches for your process and rules. So like you are your own risk manager where you've allocated yourself a daily risk.
Yeah, this is why trading is so hard, because you're the risk manager. That's the advantage of an institution, is that they're providing support for you, so you don't have to think about it, right? If you have a risk department that says your size is cut in half today, you don't have any say about that. Whereas if you're a retail trader, you have complete say over
double
how much,
my size.
Yeah, exactly. You have complete say over how much risk you're going to put on. And that's, it's part of trading, and it's a skill set you got to build in all those different areas. And that's probably why retail traders are at such a disadvantage, is because you're doing everything, right? You're doing the analysis, you're doing the execution, you're doing the risk management, you're doing the emotional control,
The reviews, everything. What allows you to stick to your rules? Because at the end of the day, there's loads of traders out there who may have, I say loads, but there's a decent number, no doubt, who have built an edge, created rules, cannot execute them.
It really comes from a place of pain, to be honest, because I know what the feeling is like when you don't follow your rules. And it's gut wrenching when you have big losses and you have to face, your significant other, and maybe you're not even telling them, right? That is gut wrenching. Like that's stuff that you carry with you for a very long time. So I know the downsides of not following my rules, and that's what kind of forces me to follow my rules.
What would be your message? There's a lot of people who are watching right now who followed your journey for a long time, maybe some who have been following just from the Apex run. What would be your message to them? From a perspective of people who are looking up to you, people who are inspired by what you've done, people who are motivated by what you've done. What would your advice to them be? What would your message to them be?
I guess the biggest piece of advice for me is I think a lot of traders have what they need. Like I think a lot of traders already have the skill set required to build a profitable edge long term, and it's just about being comfortable with that, not trying to add too much to it. Because again, my trading, I try and make it as simple as possible. The simpler I can make it, the less energy I have to spend thinking about it. So, to me, there really isn't. I can't really tell you along my journey where the big shifts were, because if I really think about some of the trades that I took when I first started trading, some of those trades were massive trades, right? From a point standpoint, maybe not a monetary standpoint. Maybe I made $150, $500, $1,000 on it. That same trade was one that made me $100,000, right? It is the same process that went into it. And it's just the size of capital changed, right? So I think if you're comfortable with what you've learned thus far, you don't need to continue seeking more information. But if you enjoy doing it like I do, I enjoy seeking more information. It's not changing my trading edge, but it allows me to just expand my knowledge, really. That's it.
So it's less so about technical strategy
just
building.
less is more. I think to me, less is more.
Yeah. And so developing that focus on developing yourself as an individual, but equally towards your trading. As you mentioned, like sleep, like it's a big one. I know Lance talks about it a lot. They have like competitions with their Whoop or their Aura. I think they have Aura rings maybe, but one of the two. I think it is the Whoop. Sorry, but we
had the Whoop competition going for a while too. It's just keeping each other accountable, right? That's the benefit of being in a trading pod, and then sharing ideas as well. We're in our group chat. We're always sharing ideas. Some of them pan out, some of them don't. But yeah, I think simplicity has taken me much further than I thought it would have.
During this run, as you mentioned, there was a day where you were down 6 figures, ended it 6 figures green. But what was it like in that moment? You take this 6-figure loss. You're publicly sharing each day. You live stream as well with your community. So some of these losses might have been on live stream. What's your mindset like at that moment when you're in the loss, when you've had that loss, to still stay calm and make some right decisions to actually have a win?
I think just being in that situation multiple times and not caring so much about what's on the left-hand side of the P&L, because maybe that one loss is just one day's worth of work. So like if I looked at a series of trades over the course of the month, even if I took $100,000 loss, it's not a big deal. I think it's so important to put that into perspective, and I think that's probably where a lot of traders stumble a lot, is that they have this massive run of wins. They have one loss that sets them on tilt. So even the 100K loss, as far as how much money it was as a whole of how much I've made on the account, it wasn't a whole lot. So like I completely kind of just brushed it off and just saw an A+ setup and took it. Typically, when I'm not trading to break a record, I'll take the loss and just get off the charts. So yeah, the mindset didn't really change too much. Like again, you're trying to focus on the next trade, and that's the only thing that matters. I just pretend like the scoreboard started at 0.
One good trade.
Yeah, pretend like the scoreboard starts at 0 every single day. That's really all you need to focus on. Because again, if you're carrying the losses and the wins with you the next day, it's going to affect your decision making.
That baggage weighs you down. It's like the weight on the shoulders. What was it like though when you're obviously coming in close to the payout and you've got the record pretty much, and even if it's not something that was planned, Next minute, you find out there's someone else who's, who's basically there as well with you. What was your mindset like then? Did it? I'm guessing
it didn't really change it much. You know, I was definitely surprised. I was like, "Whoa, that guy's like killing it too." Yeah. No, it's super awesome to see. I mean, it sounds like he's been trading for 2 years, maybe. That's right? Probably way more impressive than what I did, to me, in my opinion. So shout out to Manbeer. He crushed it, man. Like, that's insane.
It's crazy, honestly. And that's why it's like, it's such a blessing to be able to see people do that. Obviously, there's a lot of people we see who, you know, are struggling with prop firms, let's say, or struggling to find their edge. Of course, but like, it's always amazing. And we should always applaud like anyone who has done an amazing feat.
Yeah.
You know, whether they're known or not. Like that, this guy came out of nowhere. And I was like shocked. I was like, wow, this is incredible.
I think that's the thing is like, I get excited about people that are in our circle that are like hitting new levels.
Yeah.
And I'm so much more proud of them than like my achievements for sure.
Yeah.
Because you want to see, trading is a space where everybody can win, in my opinion. And that's why I don't vibe with people that have negative energy. Because there's so much opportunity. I want to see everybody win, to be honest. I wouldn't even care if some of the people that I have beef with like succeed.
Exactly. Yeah.
Like, good for them, you know? It has no impact on what I'm doing. Right.
Same across the board, right? It's the same across, not even just in terms of trading, but like, let's say a podcast, or let's say social media, or let's say a business, or like property, or whatever it may be. There is no competition. I know it's easy to think that, but it's 100% right. Like I'm the same way. I see someone done well, like seeing you and the rest of the guys who are hitting these milestones. I'm just like, that's incredible. Plus, it's very inspiring because it's like, hey, because I think one of the biggest benefits of getting closer to a network of traders or other traders is that what you realize straight away is that you're all the same. Mm-hmm. Yeah, someone's skill set might be slightly better, or they might have achieved something more. Regardless of that, though, as an individual, outside of the business side or the trading side, all the same.
Yeah,
it's just a normal person.
I think traders, to be honest, at least the ones that I've met, all kind of have that growth mindset. They believe that they can do this, and that's the positive experience you're trying to surround yourself with. You're not really trying to surround yourself with like the bottom feeders of Twitter and YouTube and the Instagram comments. You know, a lot of people that are extremely skeptical. My father was an extremely skeptical person. It didn't get him anywhere. You know, he had a dead-end job. He hated everything that he was doing. He's a very angry person. So I saw it firsthand, and I know the path that skepticism leads you down. It typically leads you down a life of pain and hardship, right? And that's a fixed mindset, right? So being able to surround yourself with positive people, I think it just has an extreme benefit to you to grow as a person, to become a better trader, and, you know, to become a better person in general.
And it's never been easier, I think. Like, it's just about putting yourself out there. It's like you said earlier. It's like if someone's there who doesn't ask any questions, doesn't do the homework, doesn't just push themselves. Yeah,
you're not going to see progress. And that's one thing that probably a lot of people don't know about my journey is I was trying to do it all on my own for a very long time. I found a little bit of success at the end of that journey, but that took a very long time. And then when I really started leveling up was after I started meeting traders. I didn't meet I never met a single trader in person until right before FX Summit, which I think was 2019?
Yeah. 2019. No, 2022 was of.
Oh, was it? Oh, man. So, yeah. Over 10 years it took me to meet my first trader, you know.
I remember,
but since then,
like
I think I was just on forums. Like I met people online, but it's a totally different story when you meet them in person.
100%, yeah, 100%. And plus, back then, like the forums are like literally like posts, like comments on a post.
I did have one person that I was really close with in Canada, who's quite a good trader, but he gave me so much life advice outside of trading, and that's why I think it's so important to network and be around people that want better. And I think that's what most people, traders, when they get into the game, they want a better life than what they're living. So surrounding yourself with more traders that have a positive
creating your
attitude.
own trading pod, right? I mean, that's a mistake people make is find a group of 100, 200.
No.
Just 10,
it's just
5,
a close,
3,
close group of people that you can hold each other accountable, push each other. You know, when other people are hitting milestones, it motivates you more. And it's just a positive environment to be in.
Kyle, it's been an absolute pleasure. I'm sure we could continue on for much longer, but a huge congratulations to you again for such a massive milestone. I'm very excited for what the future holds. I have no doubt that sometime in the future, there will be the Market Wizard title next to JadeCap or Kyle, whichever one we're going to have there. But huge congratulations. I'm looking forward to dropping the strategy video we shot over on Chart Fanatics. So everyone at home, drop a comment with your biggest takeaway from this episode. Any questions for Kyle, drop them in the comments. Maybe he'll be there. But links for Kyle, however, will be in the descriptions. Check those out as well. Subscribe to Chart Fanatics because you'll get to see Kyle's exact strategy very, very soon. Well, until next time, take care.